so as you know, stocks slumped today on some bad inflation news. But joining us now, special treat, we have truly Hall of Fame investor, Mr. Leon Cooperman, an old friend. He is chairman and CEO of Omega Advisors. Lee, great to see you. Thank you for coming on. We appreciate it.
My pleasure, Larry.
Yeah, lots of stuff to talk. Let me read you some headlines. Larry Summers, our friend Larry Summers, he sees signals of a sharp drop-off in economic activity. And then our friend Jamie Dimon, another headline. Dimon says the U.S. economy is facing some scary stuff ahead. And then, of course, today's inflation numbers was kind of a mini shock, came in a lot worse than people think. So, Lee Cooperman, Hall of Fame investor, which you are, what are you thinking about the market?
Well, I've had the same view that I have now for a number of months. And about 9 months ago on TV, I said, I feel like the Pharaoh had a dream. His dream was interpreted by Joseph in the Bible. And his dream was we were going to have 7 lean years following the 7 fat years. And I think the 4,800 on the S&P 500 is a level that we're not going to surpass for quite some time. That's number one. And I harken back to my career. I got my MBA from Columbia Business School on January 31st of 1967. I had a student loan to repay. They were not forgiving student loans at that time. I had a 6-month-old child. I had no money in the bank. I couldn't afford a vacation. I went to work at Goldman the very next day. And when I started my career on February 1st of 67, the Dow was 1,000. And 1982 was 1,000. So I'm not making a 15-year forecast, but I think that, things are, we've borrowed from the future. You've, in your introductory remarks, you've made a comment about the debt situation. It's amazing to me. In 2017, we had $20 trillion of national debt. 5 years later, we're knocking the door of $32 trillion. That's a growth rate far in excess of the growth rate of the economy. And there's no restraint. It's either whether it's Republicans or Democrats. This is your house, so I want to be very careful in raining on your parade. But President Trump was running $1 trillion deficit in the fully employed economy before COVID. So it's not just a Democratic problem; it's a Republican problem, it's a Democratic problem, and much more of the budget is becoming, non-discretionary. It's becoming fixed. They can't find anything to cut interest, cut deficit. A 100 basis point increase in interest rates is $320 billion a year in interest cost. So. Well, anyway, there's a lot to be worried about, but guess what? If you talk about what is a bear market is a period of time when more stocks are declining than rising, where the decline persists for at least a year, and when decline on average is about 25%. By that definition, a very large percentage of the market's already been through a bear market. And it's very easy to be bearish. I'm not surprised about inflation. 64% of a typical business cost is labor. And when you have 1.7 million jobs, 1.7 jobs available for everybody seeking a job, that is not an environment where labor costs are going to moderate. So I think that Larry Summers, Jamie Dimon are seeing the ball reasonably correctly, and my job is to figure out how much of that has been discounted. So I'm not a bull, I'm not a bear, I'm like a buffalo because I'm finding a lot of cheap stocks. So my biggest position is something you know more about than I know. But it's very complicated.
Well, look at Kellyanne Conway and I agree. The Republicans' hands, their fiscal hands are not clean either. I get that. That's what I'm railing against, is that they don't have a clear plan. I think Bidenomics has failed. I think we're stuck with high inflation and low growth, whether it's a recession or not. We're stuck. We're in a rut. We're in a rut for quite some time.
We'll get cooperation.
How to get out of the rut.
We get into a crisis. We've reverted to a system of leadership at a crisis. We're living too comfortably with our policies. When we get into a crisis, and I'm expecting a crisis in public sector finance, the debt numbers you went through are shocking. We're talking about $1 trillion a year buildup in debt. And it's not going to be that many more years before we have to wonder about the effect on the dollar. So I'm assuming this all ends in a recession. It could be late this year, it could be next year. But I think the combination of QT, Fed tightening, the high price of oil, or maybe a strong dollar, some combination of these 4 things create a recession, and the final bottom in the market will be about 35% below the 4,800 peak. Wow. But
Lee.
I'm also on the record saying ex a recession, I think that the bulk of the trading this year is going to be between 3,600 and 4,400. And I'll be very specific. I think there's only a 5% chance of going above 4,400 in the S&P. And I think a 45% chance if we go, if we have a recession this year, the lows will be 3,300 thereabouts.
Leon, what's your take on bonds? The 10-year is kind of creeping back to 4%. It's still below the inflation rate.
Everybody talks about bond rates being high. I went back and looked at two other excessive periods. One was the Nifty 50 of 1972, and the other basically was the high-tech boom of 2000. I apologize for these phone calls. Back then, the 10-year government was over 6%. And you had much higher multiples than you have now. So we've been through a great experiment. We had a bunch of academicians running monetary policy around the world. We had this great experiment with negative interest rates. So everybody talks about the speed of the rise in rates. I'm looking at the level of rates. The rates adjusted for inflation is still negative.
Yes.
You have to go positive before you stop the economy.
Yes, absolutely agree.
So I'm looking at higher rates, continued high inflation, and probably, regrettably, higher taxes.
Oh, no.
I would like.
No, I'm going to throw myself in front of that.
I understand. I understand
try.
with you. I pay taxes like you. And, Governor Cuomo said people are leaving New York because of the weather. He doesn't have a clue. People are coming to Florida, where I live, and Connecticut. People in Connecticut, New Jersey, New York, California, they're doomed. The people are moving to low-tax states. They're not stupid.
I want to move the whole show to Florida. I'm trying to move this whole show to Florida.
I live in Boca Raton, Florida, and you're welcome to come here. You can stay at my house rent-free.
Lee Cooperman, you are the best of the best. You are a wonderful friend, and you are a Hall of Fame investor, and we appreciate your time.
Keep on preaching the religion, and hopefully you'll get through to somebody.